Thank you to those of you who are joining us today. We're here with Strix Group, who announced their full year results yesterday. We published a note to accompany that, which you can now find up on our website. And we're now going to hear a presentation from Mark Bartlett and Raudres Wong.
Thank you very much, Hannah. So I think many of you sort of know of Strix, so I'm not going to bore you too much with the history, but if we can just go to the first slide, which is sort of the timeline slide of the business, just to sort of maybe bring you up to date with a few things, and for those new ones, just to give you a few statistics on Strix as well. Before we listed in 2017, we really were considered a bit of a hidden gem on the Isle of Man here, and honestly, perhaps I think we still are. Lots of things have changed, obviously, since we listed. But I think the products themselves do stand out. And today, our products are used 1.2 billion times every day. We're used in over 100 countries around the world and by 10% of the world's population. In that cattle market, we have over 56% global share of the market. And actually, for the people that are on the call today, more than 70% of you are using one of our products every single day. So quite a good statistics for a company of our size. As I say, we listed in August 2017, very much as an income fund, and that was really just based on our core cattle business. We had a market cap of around 200 million. It's a high profitability business, strong cash flow, and a very positive dividend policy. In October of 2020, we set out some very clear objectives in our Capital Markets Day presentation, and that was to double our revenues, primarily through organic growth. And I hope that during the course of today in this presentation, we'll be able to demonstrate that we are still very well on track to achieve those objectives. Today, the business has changed back from when we first listed. We are now 2 times larger than we were. I was going to say 2.5 times, but the last couple of days have seen quite a change in that share price, which we'll talk about, I'm sure, at the end of this presentation. But we now have 3 pillars to the business. We have the core cattle control business. It's still the same business, still very resilient, robust business. But we have 2 other categories, the water and the appliance categories, both of which are growth categories, and they will be the major part of the growth going forward. The shares had partially re-rated as investors bought into our growth and sustainability story. Still some work to be done, but again, I will hope that we can demonstrate just the commitment and the progress we've made against that 5-year plan during the course of the next 30 minutes or so. So if I can move on to the next slide, just give a little bit of information on the highlights for the last 12 months. From our perspective, a very solid performance. We had a revenue growth of 28.8% on a constant currency basis versus a target of 30%. So based on the year we've had, I think that was a very, very strong performance and certainly in line with our plans. The adjusted EBITDA grew by 6.3%. Clearly that was helped by the acquisition of Leica, but also on the other hand, we had some very significant headwinds that no doubt we'll get into discussion as we go through the presentation. We did see the net debt increase slightly, it went up to 51.2 million. A number of reasons for that. Obviously, we had the acquisition of Leica, we had the finalization of the factory in China, but we also actually invested in commodities for 2022. There was so much volatility in commodities, we did actually buy forward more than we normally would, which actually increased the debt there as well. In terms of the dividend, we have actually now proposed a dividend of 8.35 pence. That's in line with our progressive dividend. So we've actually grown the dividend again year on year by 6.3%. And I think that really does reflect the confidence of both the management team and the board in terms of the outlook we've got for the next 4 years of that 5-year plan. From an operational point of view, we're on track to deliver the medium-term targets, which was, to be really clear, to achieve 199 million by 2025, by the end of 2025. I did try and get the team to get to 200 million, but they pushed back, so we settled for the 199 million. Clearly, we had the acquisition of Leica, really strong performance over last year, so that's been a really good acquisition. Their growth rate was over 20% year on year during the course of the year, despite the pandemic. We had the China factory. That really is, from my view, a masterclass in project management. In 14 months, from nothing to a completed factory, on time, on budget, throughout that pandemic. And even during that process, we actually still managed to increase the number of fully automated lines. So you even expanded as we were rebuilding the factory. It was also a positive year for new products. Despite some delays actually caused by the pandemic, we actually saw 18 different variants of products being launched. And some of the key ones for us were things like the Aurora, Visione, and the Dual Flow, all of which have a really, really strong sustainability message. We'll touch on those when we get into the various categories. From a strategic point of view, as I say, we've continued that automation process. 73% of lines fully automated now in the new factory, and still lots of opportunity to insource further and increase the automation. Now we've got that capacity. From an ESG point of view, we had a very powerful target. We were going to be net zero by 2023 for scope 1 and 2. Still very much our commitment. Very little to do actually, and again I'll touch on that in a little bit more detail. And we continue to protect our business with our intellectual property. We had further 9 takedowns during the course of the year. That is taking down product that either infringes our own IP or it perhaps is actually not meeting international requirements. So again, we are continuing to monitor the market and protect our own position in the marketplace as well. So let's just move on to the next slide and take a look at where we are compared with those 2022 commitments in the Capital Markets Day. And you'll note in the slides as we go forward, we've tried to refer back to performance of those as well, so you can sort of track our performance. But actually, from a revenue point of view, doing very well. Significant growth in revenue versus both 2020, but also versus 2019. So yeah, that's been a really positive move for us. We've gained another 1% share in our Kettle Control business. Actually, that's now 2% growth since we had our Capital Markets Day, giving us a 56% global market share. So really well on track. We committed to 3% in 5 years. We've already done 2% of that. So yeah, well ahead of the requirements at the moment. In terms of sustainability, really good progress. I think we've been recognised as being well ahead of our peer group within the AIM-listed market, not just on the net zero commitments, but also on our new products. And certainly everything that we're doing within the business today certainly has some sort of impact on the sustainability in a positive way. As I mentioned, we've increased the dividend. The board remains totally committed to our progressive dividend. So that's very encouraging to show that growth of 6%. And then one area perhaps that wasn't discussed much is that on acquisitions. Certainly in our 5-year plan, we did not include any acquisitions in the numbers for that 199 million. And now we've integrated Leica. We are very much back on the sort of radar, if you like, to try and seek alternative or additional acquisitions that would be strategically advantageous to the business. Personally, I would be extremely disappointed if we couldn't find one or more during that period of time. We do have a list of targets and we are in discussions with a number of those as well. So that's certainly one to watch going forward. And then continuous improvement really is at the heart of Strix. We're always looking to find opportunities to offset those various market headwinds. And obviously those headwinds are inevitable going forward. And I'm sure we'll touch on those further as we go through the presentation. So with that quick summary, what I'd like to do is to pass on to Raudres to give you a little bit of an update on the financials.
Right, thank you, Mark. Revenue has increased 25% to 119 million, and now with Leica's full integration. On constant currency basis, revenue increased circa 29%. Absolute gross profit grew 20%, but with gross profit margin dilution 160 basis points to 41.9%. It was predominantly due to the Kettle Control's commodity costs, not fully offset by price increases, but our margins is helped by stronger margins on our water and appliances. Our key strategic focus is to grow absolute profit, and a swing of 1 to 2% is as expected, especially under the headwinds of commodity costs and supply chain disruption. Adjusted EBITDA increased by 6.3%, which is now fully inclusive of Leica addition. Adjusted profit before tax reported 4.2% increase at 32.2 million. And net debt is at 51.2 million, increase of 14 million, and largely to fund the very last factory capex investment. So on to the profit and loss highlight. So revenue increased 25% with Leica addition, and the organic sales growth is roughly 6%. Kettle Control's increase 6.6% top line is driven mainly by the regulated markets. The water category grew 82%, appliances grew 244%, where both categories now fully incorporating the Leica results, where we have full integration of resources and cross-border selling starting from the second half of last year. Adjusted gross profit grew 20%, where Kettle Control remains strong and stay above 40% despite of erosion of the fairly high skyrocket commodity costs that we experienced, especially in the second half. Water and appliances were integrated very well with Leica and delivered better margins. Despite of the headwind of the supply chain costs that we faced continuously last year. Included in the adjusted gross profit was exceptional costs, which was partly is the land and factory removal costs and the write-off of aged assets of the old factory. Our operating costs have, before exceptional, has increased 68%, and that's largely because of the addition of Leica, where over 70% of those costs are from Leica. So within Strix core operating model, the group has leveraged on the opportunity to reorganize our resource pool to align to our strategic initiatives. We increase our A&P spending to align to quite a few new product launches in Q4. We did incur higher carriage costs in the operating costs as there was continued disruption in the supply chain. Exceptional costs that was booked below the gross profit line include M&A costs of Leica, which is about 2.7 million, share-based payment costs about 1.5 million, and the land and factory, the removal costs and so on, and some of the other miscellaneous costs relating to the new factory, which is about 1.1 million. Adjusted profit after tax increased by 6.4%, which is in line with consensus. Our blended tax rate has come down to 2.7% of adjusted PBT, and that is due to our utilization of some of tax measures that on the move of the factory to a new city. So for the current year, we expect similar tax measure prevails, and it's about 3.5% of adjusted PBT. Going into next year, we would expect that to go back to the normal rate of 5%. So here is analysis of the gross margin makeup, where we try to analyze the weighted average of the various movements. So the full year gross profit margin saw a dilution of 1.6% to 39.7%. So Kettle Control's margin reduced given the headwinds in commodity costs. We did put in a price increase mid-year last year, and also the growth from the regulated market helped to counter a large part of the erosion. We have executed a price increase this year in Q2, and this will also help this year to reduce uncertainties on the commodity costs that we're going to face this year. Driving for operations excellence is at the heart of Strix. And during the pandemic, we experienced rising labor wages in China. It was booming in China. However, the impact of that was covered largely by our lean initiatives and our continued automation on efficiency. With full integration in both water and appliance segment, we have seen strong momentum from new appliances launches where we've seen good margins gain. While with water, we're still seeing a little bit of headwinds from the supply chain disruption, although we've started to see recovery. With the strong US dollars that we've seen last year, which is a large, getting a bit higher with Leica inclusion as well, where they're trading not just in Euro, but in US dollars as well. We experienced a margin dilution, and this, however, was partly offset with the equivalent in the US dollars costs. So in the current year, what we have done is that we have engaged in US dollars forward contracts at the beginning of the year. That would definitely help to mitigate part of the FX, a big part of the FX exposure. So highlight on the cash flow. So this is a net debt waterfall slide that shows major movements of cash and debts. We can see how the group allocates capital to the core priorities and underpins the group's strong cash generation ability. So with the acquisition, we have renewed and expanded our RCF facility to now 80 million with 3 banks at the same competitive rates for 5 years. Our net working capital requirement for this year end, for last year end actually, has increased due to our need to commit more commodities ahead of the strong winds that we are facing on commodity costs rising, therefore to allow us to lock in at more competitive rates. And there was a 4 million China VAT claim on the new factory that was incurred, and we are able to claim it back, but it will take time. It will be reclaimed during this year and next year. So this is a pure timing matter. Exceptional costs largely here involve the acquisition of Leica and the factory removal cost. Included in the capex here was the last payment of the factory construction of 6 million, and the rest is operating capex, roughly 6.5% of sales. For the current year, new year, we budgeted roughly 7 to 8% of sales on capex, as we will continue to automate on production line, and where we're considering implementing commissioning 1 to 2 production line in Italy. Along with new product launches, new MPD launches as well, and insourcing of production. So that's where we will be investing in the capex of in the current year. Our OCF conversion to EBITDA was 29%, but excluding factory capex and acquisition cost, it would work out to be 70%, which is largely in line with the Strix normal cash generation model. And if we can flip to the net debt. Net debt increased 14 million, as I mentioned earlier, which is largely to fund the final investment of the factory. And there was the last bit of the Leica acquisition as well. And now we landed at year end, we landed at the net debt EBITDA multiple of 1.3 times. Projecting to the current year, if we don't need to continue to commit more commodities at year end, and where things normalize, then we will expect this to drop to 1.1 times. However, in the current year, we do need to budget to pay for the Leica earnouts, which is roughly about 5 million this year, and around the same amount for next year, where we would expect Leica to be able to meet the earnout ratchet scale. The total liquidity pool track at 29 million at year end. We have plenty of headroom to meet the peak net working capital draw of 11 million at year end, or any time during the year. During the course of the year, we have cautiously exercised care in tending to the 4 capital priorities, which are the capex for our expanded operation and automation, acquisition of Leica, and progressive dividends. We did not pay down any loans last year, but we will continue to deleverage with excess cash not used in other priorities, as we have a very flexible revolving facility to ease our cash flow planning. So with that, concluded the financial highlights. I'd like to pass back to Mark to continue for the commercial update.
Great, thank you very much, Raudres. So what I'd like to do now is to go into the sort of 3 different categories in a little bit more detail, sort of give you an update of where things are. You can see from the slide that's up on the screen now, we're trying to link back to the Capital Markets Day also, so you can sort of see the sort of progress we made since that commitment at the back end of 2020. So just looking at the Kettle business, first of all, yeah, this really is a resilient, robust business, very cash generative, and obviously a very highly profitable segment. Still today, only 40% of global households actually have a kettle, so still plenty of opportunity to come. And Strix is certainly very well positioned at the moment with this global footprint. I mean, if you look at our competitors, the majority of them are Chinese copyists. It's very hard for those people to leave China, and it's very hard for brands to go into China. So it's very, very difficult, and they're quite constrained at this point in time. For ourselves, we obviously have a very strong team of application engineers and OEM managers in China, and we also have sales teams sort of in the West working with those brands and retailers. So that really has sort of helped our position. And during the course of last year, as I mentioned earlier, we did get a 1% increase in our market share, partly as a result of our sort of position during the pandemic. The U9 series, you remember, was a key sort of part of our strategy. We have now sold over 75 million units of the U9, so that has been really successful. And you will continue to come up with new variants for that. But actually, since the Capital Markets Day, we have now grown 2% versus that 5-year commitment. So very, very much on target. if I can move on to the next slide, we're just going to sort of look at the sort of commercial initiatives and the roadmap that are linked to that. So first of all, from a commercial point of view, the Kettle Controls is a very, very stable business. The market itself grows consistently at 2 to 3% CAGR, 7 to 8% in volume as well. We have actually then made quite a lot of changes here as well. We have actually got a joint marketing campaign now with the US brand, and we're really now trying to push that Strix brand much more. We're using this powered by Strix technology, and you'll see more and more of that as we continue to increase in our own brands as well throughout all of the different categories that we've got. One of the areas that we did have problems with during last year very much was the commodity increases. They increased extremely rapidly, and we have a lot of commodities in terms of copper, silver, and plastics. We did put a price increase in June of last year, and that was intended to offset as much of that increase as possible. But clearly, we weren't able to actually cover the whole of the impact of that, and that did have an impact on our margin for last year. This year, we will actually have a full effect of the price increase last year, but we've also put another price increase in as of last week, in fact, that will be effective from May. So we are in a much, much stronger position going into 2022, and very confident that we can cover off any sort of known issues around commodities that stand today. As you may know, our policy is to buy forward, so we've already covered at least half of the year with silver and copper by securing price points for that. And even if we were to buy at spot prices for the rest of the year, that price increase would actually cover any of the risk that we have in there. So a very, very different and much more stable position to that we had last year. We're also looking to look at different adjacencies in the business as well. You'd be amazed what products we are used for kettles. Everything from milk frothers to rotating Christmas trees. So certainly that's areas that we are looking to expand on. We'll touch on that a bit more in a minute. From a roadmap point of view, this is really business as usual for us. We are continuing to build on that U90 platform. There are new products coming in for things like North America and Japan, which need higher current. We're also looking at some niche applications in that area as well. So you'll continue to see that U9 roll out. We've also improved the electronic kettles, enhanced what we call the U68 for the glass power bases, and also some washproof controls, which are particularly used for the Cezre, which is actually a Turkish coffee maker. So all of those are additional to the standard range. And we continue to sort of value engineer our products, really trying to drive out cost, as well as look at sustainability benefits for the future. You can see on the very right-hand side of that slide, the way the controls are evolving, and we will be bringing out a next generation set of controls back end of 2023, going into 2024. These are physically much smaller. They will actually significantly reduce the commodity costs that were required, but actually they're also very difficult to manufacture. Clearly in our factory in China, we have very sophisticated automation. We will be able to do those and actually improve our production efficiency, but actually very hard for some of our competitors to follow that as well. So if I can then move on into the water side of the business. A strong start in 2021. Clearly we had the acquisition of Leica, which was driving growth, but you can see 82% growth in the marketplace. So it's still a very, very strong performance. New products obviously will drive growth, and there's lots of innovation coming through. We've got a lot of new technologies that we're engineering through our two acquisitions, in fact, through both Halo Source and through Leica. But our aim in this category really is to be the recognized challenger to the market leader in water, particularly in the point of use areas. Key to that growth, without any doubt, is the growth into the two largest markets, which are USA and China. But there's also a lot of expansion to be done still in Europe as well. I think it's worth touching upon some of the headwinds that we had in 2021, particularly for the Aqua Optima brand as well. So in Aqua Optima, there were three main issues that we faced. First of all, Brexit. I mean, that really did actually hit us quite hard. Certain routes into China meant that we had to have a warehouse almost in every country of Europe to be able to sell. That clearly isn't practical, and it made it unprofitable. So actually, we stopped selling through those channels for the best part of 9 months last year, and that was just under £1 million worth of impact to our sales of the Aqua Optima brand. So quite significant. I'm pleased to say the acquisition of Leica has been really beneficial from that point of view. We now store everything in the warehouse in Leica, and we're even starting to manufacture some of that product for Europe in Leica as well. So that problem has gone away as of November of last year, and we're already seeing that ramp up of Aqua Optima coming in. So in 2022, that will get back to normal levels and actually see quite significant growth, as you'll see in a minute as well. The other area we had, one of our suppliers decided that we had become more of a competitor. So we saw price increases of some of the products of up to 72%. Clearly that is a really big issue. We did decide that we would then change our strategy somewhat. So we have actually now insourced all of those products into our factory in China. And we are now able to produce all of those ourselves, giving us security of supply, but also actually helping us to improve margin going forward as well. And finally, the third part, we were hoping to start to get a much better push, both for Aqua Optima and Leica actually into America. But unfortunately, there was a lot of issues around approvals. During the pandemic, you could not get those products approved, and therefore that delayed that process. I'm pleased to say we've got over that now. Post-pandemic, we've got the approvals that we require. But it did mean that we've got about a 9-month lag in terms of where we were trying to get to. So we'll start to see the benefit of all of those initiatives coming in 2022. So again, I think a much more stable base as we come into 2022. Sort of moving into the commercial and roadmap side there. Certainly, from a go-to-market point of view, significant growth in our branded goods. And that was particularly through Amazon, through that pandemic period, although we're also looking now at other online routes as well. In North America, we had some good TV airings. Today, actually showed our American products. We managed to sell 1,000 in just over an hour. So still good prospects for that. And obviously, we now have a much wider portfolio for the American market, having got those approvals. So that's very positive. In Asia side, we have launched a first private label product in that region. We can't actually announce who that brand is, but again, that's a very, very positive move. And that is our filters going into their product. So we'll see some growth coming out into that area as well. And in the UK and Europe, we have actually had some really good wins there. Actually, we've had a very big win with one of the French retailers, but we've also got a distributor that covers the whole of Europe that is taking on the Aqua Optima product as well. So, in addition to the benefits of the sales we lost last year, we've also had some major wins in terms of contracts going into 2022, and we've got more than 200 different store listings in the UK market as well. So, I think a very good base to sort of kickstart again back in 2020. When you sort of look at the roadmap of products, you're looking at sort of 2020 to 2022. We've done a lot of work refreshing the brand for the Aqua Optima, so we can really differentiate that from Leica. So we get this sort of good, better, best approach. As I've mentioned, we've got more in-house manufacturing, and you're going to see more of that to come. Now we have that new factory in China. There's a lot more things we can do to pull in, and that obviously will help our margins in the sort of the latter years in our 5-year plan. We have actually secured a number of private label contracts, so that's very, very positive. And we've actually launched our own perfect pour fridge jug. So as well as taking those products that we were sourcing from Europe, we've also actually improved and given ourselves some unique features as well, which is really important. And we brought out a new filter which will address the alkaline issues in some of the territories as well. Going on into 2023, really trying to expand our range of price points so that we really can get this good, better, best approach for all of the different markets we serve. We're looking at new filters, new technologies within our filtration to make sure we can cover all of the requirements of different markets, but also for unique consumer propositions. And we're looking to expand our footprint in the coffee machine filters as well. We've talked before about Leica. They do a lot of private label products into machines like DeLonghi, for instance, which is obviously a very big and growing business. That is an area definitely that we've got our focus on, and we've already secured one contract for another major brand in that coffee segment, which will help grow our business in that area as well. So I think good growth, 82% for last year, but I think a lot of activity now. We've got the foundations right to make sure we can deliver on that 5-year plan for the water category. So moving into the appliances side, again starting with that sort of waterfall chart. A very, very strong performance, 244% growth. It will be off a low base, and obviously that includes the addition of the Leica products as well. But we've had some really good wins in this area, particularly in some of the new product launches from the Strix side of the business. Our objective here is really to drive that market expansion, really trying to push out from being just the local brands to get the more global expansion as well. We want to be seen as the innovation leader in that beverage station category. And I think as we get into the products, you'll see we're making some really good headway in that already, actually. If I move on to the next slide, just to look at the sort of waterfall side. the roadmap and the commercial side. So first of all, yeah, we have seen some really good growth in branded finished goods. I mean, that accounted actually for 89% of our revenues in this particular category. In North America, we saw the launch of the dual flow. That's a kettle and a 1 cup combined. Really strong sustainability messages in there. We've seen the launch of the sterilizer dryer for baby care with one of the leading brands in America. Yeah, and that will continue to expand to other areas, I'm sure, as we continue to promote that product. Yeah, in Asia, we saw the beverage station being launched by a major A brand, an international brand, which was really encouraging. So not only have we launched that product with the Aurora brand, but we've also seen major brands take that on as well. And we want to see more of that going forward. But we've also secured a distributor in China, which will cover both the Aqua Optima part of the business, but also the appliance side as well for Aqua Optima. And in the UK, so we had the very successful launch of the Aurora product that launched in June, a little bit late due to some of the impacts of the pandemic, but actually exceeded budget in the short time that it was on the market. Yeah, it's getting very good ratings on Amazon, 4 stars plus. So please go and have a look at that one. And we've already now seen other parts of that range being launched. So we've launched the Aurora Hot. The Aurora Chilled will be launched in Q2 of this year as well. And over the next 12 to 18 months, you're going to see 10 or 12 different SKUs coming out in this particular area. So this represents a very key part of the growth in the appliance segment, but performing extremely well at the moment. Yeah, we certainly have multiple brands secured for the launch of the dual flow. So you'll start seeing that dual flow product coming into the UK and Europe in Q2 of this year. So if you're looking at the roadmap side, particularly sort of looking at the 2000 and 2022, we come from a very strong background. Obviously, the Tommy Tippy product that we developed with them has worked very well. That technology has been adapted now for the beverage type stations, but we really are continuing to focus on that innovation, trying to find products that will allow consumers to live a safer, convenient, and a sustainable life at home. Yeah, I think the Aurora is a good example of that. It's certainly been well recognized by the market. We've also brought out a product called Visione, which is actually the only induction kettle with an auto switch off that will work on that induction hob. Already that's won a German Design Award, and it's also been awarded the Red Dot Design Award. So 2 actually very prestigious awards for the design itself. At the moment, it's been released in very, very small quantities. So it's been a soft launch. In Q2, we're doing a particular campaign to drive that. So at the end of the Q2, you'll see much more activity around that induction technology. And to be honest, that's a very disruptive technology. We chose to do that really more to protect our own position. And we're already now being engaged in conversations with some of the major brands about the technology. So clearly, this is something that other people have thought of. It's actually very hard to do. And we have very strong patents around that particular technology. In Leica, they saw a very significant increase in their vacuum range. This is for the sous vide cooking and the vacuum packs that support that. So they had a 40% increase in that. And that really is a range extension, really planned to address the food waste challenge that exists. And also you've seen the Leica with dual flow coming to the market. Again, a very strong sustainability message there as well. Moving into sort of 2023 and beyond, we want to increase that focus on the beverage range. So you're going to see more in the range of coffee systems, being introduced to really bolster our sort of breakfast range. And you're going to see a modular approach to that Aurora type technology. So bringing out all sorts of different variants to really expand. And as I say, that's going to be the most significant part of the growth in the appliance sector. So if I move now into ESG, touching on that sort of sustainability part of the business, just looking at the roadmap of where we've been and where we've come from. In the early stages, 2020, we really tried to align the business to the sort of external goals. And honestly, that was much more recording what we do. We are a business that works very, very strongly around all the ISO principles, and we were doing a lot of that work, but we weren't really discussing it or putting it outside. So then we put out our sort of first published report out in 2020, and that was very much focused around our products. And certainly inside the company, we set up structures to make sure that the company really did start to think about sustainability in their everyday life. Initially, that was led by myself. Now it's actually led by teams across the company. And actually, it's something that is discussed almost every day inside the business. In 2021, we'd set some quite specific KPIs. One of those to be net zero by 2023. You can actually find those KPIs on our website. In fact, they've now been updated. And we've also integrated Leica into those reports as well, because Leica themselves had a very, very strong culture on sustainability and ESG. We've now set up a committee on our PLC board, which is led by one of our NEDs, Richard Sells, and that also just ensures that the board is very focused and making sure that we are moving in the right direction. Going into 2022, we have set out to make sure we can provide the TCFD reporting. And obviously we're making sure that we do hit that net zero commitment, which we're very confident of achieving. And then looking ahead, really is now moving into looking at scope 3 and 4, making sure we can maintain that lead in the market. We're looking at things like life cycle analysis, which also goes down to working with our suppliers as well. But we've also increased focus on our social agenda, supporting local governments and committees, communities. And I think one of the really exciting parts for me, at least, is what we've really seen is this has been really well adopted inside the business. We've seen employees across the globe coming up with all sorts of ideas. I'm about to have beehives put outside my window here, so I'm hoping I keep my windows closed going forward. We've got wildflowers going there. We've even got initiatives where we use our wastewater to heat the building. So it's actually really sort of developed very quickly, and I'm pleased to say it's really sort of been embedded as part of the culture of the organisation. So if I move on to the next slide, looking at our emissions, first of all, we didn't put too many KPIs out until we completed the new factory, because we knew that was going to change sort of the footprint completely. And as you can sort of see from the slide here, China is by far the biggest source of emissions. It's the major factory that we have. We've put solar panels across the whole of the roof of that factory, and that is enough to cover all of our production, but actually that's only 10% of the energy we use. We actually use a lot of energy in boiling water, testing kettles, as you can imagine, and all of the remainder of the energy used is actually from renewable energy, or it will be through the course of this year. As I said, we are very much an ISO-driven company, so we have accreditations for environmental standards, for health and safety, for quality, electrical safety, and that's always been at the heart of the company. We did secure benchmark status in the Isle of Man in both our locations here, actually, and in parts of China. That is a really prestigious award. Only 2% of companies that actually seek approvals achieve that process. So we were really pleased to be awarded benchmark status. I think perhaps one of the most impressive things for me in the course of last year is just a month after we opened the factory in China, we actually secured the ISO 50001, which is the energy management standard. To do that within a month, I think is an incredible achievement. I think just demonstrates the commitment of the team to really make sure we are on that sustainability path. And we're going to now roll that ISO 50001 across all of our business as well. That net zero is being achieved with very minimal offsets. It's only less than 5% actually offsets. And they are things like electric transportation. We've got electric cars here. We use electric cars for our transportation over in China, and things like the heating system, where we're actually reusing the wastewater and putting it through the heating systems here on the Isle of Man in particular, to make sure we can make the most of that waste material. So really all we need to do to hit our net zero is to put a couple of solar panels in Leica. So nearly all the cost is already absorbed in the prior year, and a little bit of renewable energy in Leica as well. So everything else really is done. So we're very confident of our goal of that net zero. So if I can move on to the next slide there, looking at scope 3 and 4, and I really like this particular slide. This is my feel-good slide, and a bit of a sales pitch as well. So first of all, business travel. I mean, I used to travel between Isle of Man and Hong Kong every month. I haven't done that for 2 years for very obvious reasons, and I never see myself doing it again, because we found different ways of working. I mean, certainly the pandemic has changed a lot of things in life. Some of those actually are quite positive. And certainly we set a goal to be 10% below pre-pandemic levels going forward. I think we will smash those targets, frankly, because I think we don't need that same level of travel anymore. We're working very closely with our suppliers, primarily in China, and we've had really, really positive support from them. And we're also working on that ISO 14044, which is the life cycle assessment. But I think the interesting one for me is the avoided emissions, because our products fit this perfectly. In kettles, highly efficient way of heating water. If you were to use other forms of products to heat water, you would actually have spent more than 5 billion kilograms of CO2 annually. That's the equivalent of 1 million cars. So kettles actually are a very, very good and an energy efficient way of heating water. And if you think penetration is only 40%, there's a lot more that can be done. If, for example, we switch off our kettle just 2 seconds faster, we will save 1% of energy, and that's £20 per household. It doesn't sound a lot, but when you multiply that by the 170 million kettles sold every year, yeah, that's a big number. And then you get the old favorite of overfilling kettles. So every year in the UK alone, we boil 300 million pounds worth of, we use, sorry, 300 million pounds worth of energy to boil water that we never actually use. And what you'll see is a lot of the new products we're bringing out, address that issue. We're trying to educate consumers to work differently. And then looking at the appliance, you've got the Aurora. I mean, that actually solves your 300 million pounds because you only ever boil the amount of water you need. It's highly efficient, saves energy, stops the overfill, but it's also providing filtered water. So it removes the need for plastic bottles. And in 2020, Aqua Optima sold 5.8 million filters. We've actually sold now 50 million filters in Aqua Optima since it started. And that 1 year's sales equivalent to 580 million plastic bottles. So clearly, again, a very positive move for the environment. And then you've got the Visione, the induction kettle, first of its kind, disruptive kettle, but again, does have quite a number of sustainability benefits as well. Conscious of time, so I will keep plugging through here. On the next slide, this is just talking about sort of the outlook now and acquisitions. So as part of our Capital Markets Day, we really didn't talk about acquisitions very much, and that wasn't included in our 199 million number. However, I personally would be extremely disappointed if we couldn't find something, one or more actually, strategic acquisitions through that period. Now we've actually integrated Leica and we sort of got that settled down. We started to get the benefits of that. This is now very much on my radar. We have a team of people working with us trying to identify appropriate targets. And certainly we now have a target list of companies that we're working with, and we are engaged with one or two of those companies on a regular basis now. It's sort of a bit of a watch this space. But really what we're trying to do here is find a company that will enhance our vision statement for sure. It will fit with our core competencies, so likely a technology-led type business, and one where we can get some significant synergies within our core competencies. Hopefully that would also expand our intellectual property, our product portfolio, and hopefully distribution as well. We do have a very, very stringent process of evaluation. As I say, working very closely with external parties, including our two brokers, but we do have active dialogue ongoing in this area. And I think if you look at the progress to date, we've successfully integrated Leica. We also had the Halo source in 2018 as well. So really this is a good example of how we've been able to benefit the business. And certainly we feel that from a shareholder value point of view, it's the right thing to do. And we are certainly proactively now looking at the next acquisition. I can move on to the next slide. This is really sort of just looking at the outlook. So from us, we have a very resilient and robust core, continued very strong financial positions, despite some of those headwinds that we've had. And yes, we may have had a little bit of a knock in the cattle market and the currency, but I think we've got a very stable position going into 2022. So I certainly wouldn't expect to see that happen again during the course of this year. From a growth point of view, we are continuing to invest in those compelling growth opportunities, whether that be through acquisition or organic growth, but we're still maintaining a culture of sustainability and continuous improvement. So we're still very, very focused on managing our costs. From a risk point of view, yes, of course, there's still a very challenging backdrop. Commodities, shipping, packaging, foreign exchange, that list goes on. I'd like to think that we've demonstrated, we can actually manage our costs very well, both our variable costs, but also that we've taken actions in 2022 to get a very strong foundation coming into 2022. And obviously from an efficiencies point of view, we are obviously trying to manage our costs, manage our efficiencies, put in things like the automation and continue to do that so that we can fight against those headwinds. And obviously in an inflationary environment, we'll continue to put price increases in an attempt to offset any of those known commodity impacts. So finally for me, just from an investment point of view, we have, I believe, successfully delivered solid growth in that adjusted profit after tax, which was in line with the consensus numbers that was out there. And I think that's a testament to how well the company has really been able to deal with the challenges of both the pandemic and those various headwinds that have come our way. It is a high quality, resilient and robust business. And we do actually have the benefit of our location, having very strong and diverse products, but also very good geographical diversification as well. So we're selling to over 100 of our products are going to over 100 countries around the world. We are very, very focused on continuous improvement, efficiency measures and strategic initiatives. We will continue to do that. That's part of our culture within the business as well. and we have a very solid balance sheet. Low leverage provides very good financial flexibility, and we will continue to deploy capital consistent with the allocation of our capital priorities. So where we've got spare cash, we'll deleverage, but we do believe there's much better things we can do in this business, including strategic acquisitions going forward. We are committed to the dividend. As I said, we increased that in line with our policy. So it went up by 6.3%, linked to those underlying earnings, and we will continue to do that as we grow going forward. So final summary for me, we are just really one full year into our 5-year growth plan. From our perspective, very well on track. And I think, as you can see hopefully from this presentation, committed to delivering against that target. We believe we are establishing a world-leading, innovative and sustainable technology business. So with that, I will pass over to Hannah for any questions.
We have plenty. So do you see further M&A as necessary to meet your 5-year revenue target?
Yeah, absolutely not. The 5-year plan was without acquisition, so an acquisition will be incremental or accelerate the plan.
Gross margins in water and appliances were well ahead of long-term expectations. Why was that, and should long-term profitability expectations be revised for these operations?
Yeah, that's a really good question. So when we set out our Capital Markets Day, we were obviously quite conservative on our margins on GP, which is what we reported in Capital Markets Day. It has deviated from that in sort of the last year, with actually kettles being below where we were expected to be because of those commodities, and actually water and appliances actually exceeding that. I mean, a lot of this goes around the mix of products that are sold. So yes, we're very, very pleased, and it's very positive to have those margins in water, and we will continue to try and drive those margins going forward. However, I think you do need to look at the mix. There's always a plus or minus. So particularly in appliances, if we sell components to a brand, maybe that's Tommy Tippy or Philips or someone like that, it's a really high margin. It's a patented technology that you're selling. If we're selling an appliance such as an Aurora with Aqua Optima brand to it, you can't get the same margin. So that will actually vary, and eventually we'd like to get to an 80-20 split where the majority is actually going through these third parties, these large brands who, let's be honest, have a much bigger presence in the marketplace. So as you go out, that actually should improve margins a little more in that appliance segment. So I think we would probably stand by our Capital Markets Day numbers. And I would, for a little bit of prudence, I'd probably sort of go somewhere between the two of where we ended up in those categories versus our Capital Markets Day.
Thank you. How much organic growth are you expecting to target per annum from the water and appliance category separately? Can you discuss the levers that will help you achieve these growth rates as well?
So in the water category, it's very difficult now. I mean, Leica is integrated into our business, so it's almost impossible to separate out the costs and so on between the two. So procurement's combined, the sales channels are combined. So there is no longer a Leica and Aqua Optima. It's actually a water category that we talk about. So all of that growth comes from the water category that we have in our business today. There's no further acquisitions included in those growth numbers. And with the water side of the business, that is a little bit of a split between new products that go back. So we've got quite a good roadmap of new products, but a lot of it is actually geographical distribution growth. So this year, certainly you're going to see very significant growth in Europe with contracts already signed up. We've got a new distributor in China that's taking the Aqua Optima into the market for both water and appliances actually, and we signed one contract with one of the retailers in the US. But this year, predominantly Europe's going to be that biggest growth opportunity. As we go through the 5-year plan, you'll see much more coming from China and America as well. So that really is as we had scheduled, maybe with a little bit of delay for that 9 months that we had in America.
Okay, thank you. We saw some substantial direct sales at much higher levels. Given the positive picture being presented and the current depressed levels, it'd be reassuring to see some management purchases. Do you have a view on that one, Mark?
I do have a view. I mean, just to clarify, I mean, particularly for myself and Raudres, who are sat here, facing the camera. We we're both on Hong Kong contracts because we were both living in Hong Kong at the time of the listing, and that actually gives you a very significant tax liability. It was actually last December, so there's a certain period of time where you have that, and it's on the whole of your allocation, regardless of what vests and what doesn't vest. So we had to make sure we did that. So that perhaps explains the timing of that sale. And both Raudres and I have put lock-ins in that we wouldn't sell any more shares for the 12 months. So it's absolutely nothing to do with the performance of the business. Let's be really clear. It was really just to make sure we had funds for those liabilities that we had as a personal point of view. In terms of where the share price is today, I can't, it's a really attractive price, frankly. So yes, it's something that is on our minds. I'm sure, the same for the board as well, but it certainly can't make any commitment at this point in time. No,
thank you. Can you give some detail on how the sales for the dual flow kettle have been since launch?
Yeah, but very, very small, as expected, to be quite honest. North America is not a kettle market. We first launched that product in North America. It was sort of a bit of a test run. Obviously, it's a very different power in North America. It's 110 volts that you have over there. The 3 kilowatts was actually quite challenging. So when we want to bring it into the UK, there was a bit more development than we need to do. So to be really honest, the numbers are immaterial for the dual flow at this point in time. We have a lot of partners talking to us about the launch of the dual flow in Europe and the UK. So at the back end of this year, you'll see much more activity around that. I'll be really honest. I mean, it's a really nice product from a sustainability point of view. So it ticks a lot of boxes to stop you overfilling. And I think, we've seen really positive reactions when it's been presented. But the real volume driver is going to be that Aurora range. That really has taken off. And I see that as much bigger potential, giving the sustainability message, but also giving a lot more utility to the consumer as well.
Okay. For the full year 21, there was significant exceptional costs. Do you anticipate any further exceptionals in full year 22 in respect to COVID, like acquisition, integration, or the Chinese factory move? And if so, at what level?
So I think the China factory's done. That's all finished. The Leica part is done. Other than the earnouts, there's still earnouts that we need to pay for the 2 years, and we're giving guidance of about 5 million per year for the earnouts, assuming all the numbers are hit. So last year's numbers were hit, so this year's sort of fixed. Next year obviously depends on performance this year. Outside of the factory's done. No more costs there, and Leica's done. So that's finished. There's always a little bit of restructuring in the organization, although it's very, very small. We've done the same again this year. We're constantly looking at our resources to make sure we've got the right resources for the 5-year plan. There will be a little bit an element of that, but you're looking at 100, 200K. It's nothing in the scheme of things. And I'd really like to hope that we're through most of the COVID issues these days. I mean, you can never say never, but so I think in terms of where we were, it's a significant reduction. Guidance we're given at the moment is about 7 to 8%. So capex, 7 to 8% of the revenues. And that really is because we want to continue to invest in some of those production lines, as Roger has mentioned, particularly in Italy. We're looking to put 1 or 2 lines there as well.
Okay, thanks. Level of maintenance capex as a percentage of sales. Can you expand on that?
When you look at that 7 to 8% capex, about 30% of that is maintenance.
Okay, thank you. A little bit more detail is requested on the competitive edges in the water category. Slide 18, you detailed the fresh branding and the offer and the best quality product. Can you detail how these will significantly differentiate you from the competitors to drive the organic growth rates?
Yeah, so we have quite a wide range of products, and frankly, there's not much innovation in that point of use water category globally. So we have with Leica and Aquoptima a range of products now that really is quite substantial. So we do everything from antiviral filters, antibacteria. We're working on all sorts of new claims to take out microplastics, to take hormones out of water. You'd be amazed at the different things that you can find in water around the world. So there's a lot of work being done on that to make sure that we can have a comprehensive range that suits all the different geographies. So a standard filter in China, it may make the water taste a little better, but actually they want more than that. They want the antiviral, the antibacterial filters, which today don't exist in those markets, for those types of products. So certainly we believe that we have a unique set of products, and we continue to expand on that in those territories. We also have a universal product, so we can actually fit in the majority of other appliances around the world. So when people are buying replacement filters, we can provide a very commercially attractive solution to the branded product that exists today. So that gives us a wide addressable market to go after as well in terms of growth. But I think it's the depth of our product portfolio which is really quite interesting, particularly as we're now starting to talk to different retailers in the US and other parts of Europe as well, that we can provide this complete portfolio of products in the marketplace, and that really will help drive the growth going forward.
Okay, level of automation, you mentioned it's increased to 73% following the move to the new factory. What's your medium-term target for automation?
Joe, we are going to continue to drive. The more lines we put in, the harder it is to grow in percentages. But I think realistically, you could get somewhere between 82 to 85% in the factory. You're never going to automate everything because you have to have a certain amount of volume to make it practical to put an automated line. If you're not running sort of 10 million components through it, it doesn't make sense to put the automated line in. It's got to run 24/7 to make it practical. So I think between 82 and 85%. So certainly in our 5-year plan, we will continue to be putting in automation, but also adding insourcing in as well. There's a lot of processes still and a lot of products we can still insource, particularly in the water category.
You mentioned in the presentation the insourcing from a supplier who viewed you as a competitor. As headwinds continue, how much more can be offset by manufacturing more components in-house?
You certainly there's in the kettles, it's not so much that, it's efficiency gains in kettles. In the water side, we are probably now up to about 80% manufacturing all of the products. So there's a little bit still to pull in, and we will work to do that over the next sort of 2 to 3 years as well. And then the appliances is sort of a whole new category. So in some cases, we can pull more of those processes and components in. For instance, the Visione, the induction kettle, we make the whole product in our new factory. So there's obviously a change in the way we're working in that particular product as well. So you will see more of that as we go through that 5-year plan. You're bringing more of those products in-house. The
current lockdowns going on in China, are you expecting that to have any effect on product availability?
We've not seen any impacts to date. We are obviously taking lots of precautions out there as well. In our own factory, there is 0 incidents in the area we are, and also in the surrounding areas of our factory. So it's something obviously we're monitoring very carefully. And in the factory itself, we take precautions well above those of the government mandates. And that's not just in China, we do that across all of our sites. We have taken some other precautions as well. So we're actually holding something like 4 to 6 weeks of finished goods to make sure that if there was any issues, that we can still make sure we can supply goods. And we've actually also now put some stock off-site in a different location, such that in the worst case scenario, if we did have a lockdown in our own factory, we could still supply from a third-party warehouse. So we're trying to take as many precautions as we can to eliminate risk. You can never eliminate all risks, of course you can't, but we're doing everything we can to make sure we minimize any risks out there.
I think this next question leads on from that. Obviously, the relationship with the Chinese authorities at the moment is a good one, but if political sentiment globally turns against them, do you have a plan B on how to deal with working from a new factory?
It's interesting. In reality, moving factories is actually quite easy to do, and we've sort of demonstrated that with the speed at which we've built and moved a factory. In fact, each line you can decommission and recommission in about 6 weeks. So it's something that can be done. In truth, 93% of kettles today are made in China. There's a few made in Poland, there's a few made in Malaysia, a little bit in Turkey, but the majority by far is made in China. So even if you were to move outside of China and manufacture those components outside of China, you'd still be supplying to China to make the kettle. So it doesn't help you that much. So yes, it's something that we watch very carefully. In all honesty, we have a very, very good relationship with the Beijing government and also with our local government where our factory is. And it's something that we work very, very closely and work very hard on with all of these sort of the government, within that area. So right now we don't see any significant risks, but it is something that we monitor very carefully. And as I say, if in the worst possible case scenario, we could actually move those lines if we needed to do that.
Thank you, reassuring. Final question, I'm conscious of time too. When do you expect to enter the coffee market, and how large do you think it could grow to?
We haven't put a number on the size. I mean, obviously the coffee market is a huge market, and today, we only play in a very, very small section of that market. We would expect to see it grow certainly within, you'll start to see products coming on that line within this year, certainly from Strix's point of view. I can't give you an actual figure of where it will go to, and that will be a combination of our own technology as well as some source technologies as well. So we can really try and beef up, if you like, that beverage offering that we have from products. So I think you'll see quite a substantial growth of that towards the back end of this year, but certainly going forward as well.
Well, thank you very much to you both for your time. Thank you to everyone who's been listening in. Extremely helpful canter through, and we'll look forward to an update in 6 months' time. Final words from you, Mark.
One question, one thing before we go. We have actually relaunched our website, so please do go on the website. This is a corporate website, so there's a lot more information going on there. And actually, over the next 7 to 10 days, you'll see a lot more sort of video content and things going on there. So yeah, definitely watch the space. Yeah, we're trying to sort of bring it more up to sort of speed, and that really will then be expanded with additional websites being brought in as we bring out all those various new brands. So as we become, as we promote more of the brands like the Leica and Aqua Optima, during the course of this year and next, you'll see a lot more of developments on that side as well. But I think you'll find a lot of quite valuable information on that website if you want to go and take a look at that strix.com.
Thank you very much.
Perfect. Thanks very much. Thanks, everyone.